If you had bought Bitcoin in 2010, you would have lost it within a year. Nobody would hold it till today's prices. I had a general idea of creating an algorithm that would trade for me. People do it themselves. Artificial intelligence is not there yet. Currently, we're one of the largest projects that use Ethereum. What is your current TVL? About 560 million. 60 million in 4 days. Zero commission for traders that trade manually, giving our users more opportunities to earn money. Guys, we are protected by Vitalik Buterin. Hello guys, welcome to Invest Zone. Today we have got very interesting guest on our podcast. I guess everyone have heard that DEX exchanges are quite hyped up, and we decided to have an interview with a representative of one of the top DEX exchanges, which is quite hyped up on the market, DEX Lighter. Vladimir, welcome. Hello. Vladimir, we already discussed some of the key moments behind the camera. So when you were 22, you have graduated Stanford or it was Harvard? Harvard. Okay, so you graduated Harvard University? What did you do afterwards? What plans did you have when you were 22? Actually, I graduated when I was 18. Oh, 18. So what happened later? Which projects did you work on? What you were paying attention to? In what place you were? I think it would be curious for others to understand your personality. Prior to university, I was participating in competitions. I was part of the American team for computer science and physics competitions. Later in Harvard, I was studying mathematical finance, started to study markets. Back then, even started to trade a little bit. Later, I joined hedge fund Citadel. It is the second largest hedge fund in the world. Its founder also was in Harvard, back in the 90s. And at that time, they just started doing high-frequency trading. So when it was? 20 years ago. 20. So 20 years ago, you were already doing HFT. Yes, and back then, Citadel were among the first who started doing it. And I was a member of that team. What HFT is for? Who needs it and why? Well, it's necessary to increase market liquidity. For example, back in the 90s, there was no electronic trading at all. Everybody traded by calling over the phone or running around the exchange building, basically shouting. Yes, and back then, liquidity was significantly lower, and overall volume was smaller compared to open interest. And if you would like to close some sizable open position, it is impossible to do. Sort of impossible, or like they show it in movies. Price would immediately drop from 10 to 5 within a minute. It was like that? I'm sorry? You had short squeezes like that? Well, back then, for example, in 88, there was this famous... Basically, yes, it happened like that. And when electronic trading appeared, and many professional players were able to trade algorithmically, which in turn increases liquidity. If one got good algorithm for price, and if someone got a better one, then price can quickly change. And yes, they earn from it, but it is also useful for ordinary traders, because as a result, spread is smaller and price changes adequately. Not like when it stays the same and then suddenly up to 5% change. It changes more reasonably. The graph looks organically, right? Yes, and better market liquidity as a result. And the more you have companies that trade algorithmically, the more liquidity you get. And later, for example, let's take for example spot prices and futures prices. Somebody should create something between them so that in order to make them move together. Correlation. Yes, correlation. And the companies that do HFT, they create this correlation. I noticed that recently on the markets, there is this coin 0G or OG. Recently it got listed on all exchanges. And its spot price is $7, but futures price, other way around. Futures price is $7, but spot price is $6. Why prices are arranged in that manner? And it can stay like that for quite a long time. Well, that's because when new coin gets listed, there's a huge imbalance between buyers and sellers. You know how these perpetual futures work? That every hour it balances through funding rate. Yes. Yes, in case if we have significantly more buyers than sellers, or other way around, we may get such imbalance. Usually within 1-2 months, it will go away. On our Lighter platform, we even have our Lighter platform got this page called Quant, where you can observe arbitrage. Oh, so you can earn something from it? Yep. Can you please explain in simple words? Because it is a quite common thing in crypto markets. And how you can earn from it? Well, you can earn from it. For example, if you got you got this funding rate, and in case if it is bigger for futures than it is for spot, you can buy a spot and sell futures. Short the futures position. Yep. Yes. And because of this difference, every hour you can get, say, well, sometimes it can be quite large. 0.1% every hour. It's quite... recently there was a coin, and still is, called MEXC, Muha. We call it Muha in Russian. For this coin, hourly funding rate is -2%. Just imagine. And if you take 10x leverage, that's 20% of position. And just after several hours, I got plus 100% to my deposit, even though my open futures position was negative. And I closed it and I still managed to earn. Was it a hedged position? Yes, it was a hedged position. Later I told about it in my Telegram channel. Look guys, simple way to earn money. Without risk. Because you have this funding rate. And there are many coins on the market using which you can earn. So we got this quant page where we show the opportunities. Arbitrage between Lighter and Hyperliquid. Or between Lighter and Bybit, where you have biggest difference in funding rate. Although there is a risk. In case if you use leverage, you risk liquidation of your position if you get long on one side and short on the other. That's why it's not fully risk-free. So ideally, you should use 1x leverage. Right. We traders are risky guys. You have to take risk. I like it. I like to say no risk, no Porsche. Right. Okay, thank you. So so how long did you work in Citadel? Yeah, so I worked there, I think, about 1.5 years. And then I worked in other fund, which at the moment haven't used HFT yet. And they wanted to get it implemented. And there I built a team, I would say, from scratch. What was your official position? I was head of HFT. Well, in my understanding, HFT, which means high frequency trading, I don't understand. Is it profitable enterprise? Quite profitable. Well, for example, even back in those years. Today, even more profitable. But even back in those days, Citadel was making $1 billion a year. How much resources do you need to start? How many millions of dollars? 10 million, 20 million? What kind of team do you need? How many? Just to start and make it work. Well, things that I just were explaining were more like about traditional finance. Let's take traditional finance. These days it became much more expensive than it was before. I think today, just to enter this field, you need $50 or $100 million. In crypto it's easier. Probably 10 times less. That would be in crypto. Right. So if it was 50 million, it would be 5 million for crypto. Well, that is because here in crypto markets, you don't have to, well, there's no need for, you don't have to have special broker licenses, and you don't have to pay for special data to Bloomberg. Yeah, that's right. All these expenses are less. And that's why you can start, well, for example, I personally know a couple of traders who started like that with initial capital, about 2 to 5 million, started working in this field, and today they earn tens of millions of dollars a year or more. You know, I had this idea, this thought. I trade crypto 8 years already, since 2017, and I trade manually, only manually. I had a general idea of creating an algorithm that would trade for me. And for some reason, do such algorithms even exist? You know, an algorithm that would repeat my actions, would think and make decisions in the same manner. Because algorithms are linear, but often you need to think non-linearly. You need to think out of the box. And probably it is impossible to encode everything in an algorithm. Well, this is an old dream that people from quantitative world have. Whether or not we can use artificial intelligence in order to replace what trader that makes his own decisions does. And what is interesting is there are algorithmic strategies that do work. And there are traders that trade manually. And their strategies are quite different to do algorithmically what humans do. People do it themselves. Artificial intelligence is not there yet. Maybe a new generation of AIs will allow it, and in the past, when the companies tried to do that, for example, let's take last 10,000 trades that were made by our most skilled trader, and let's try to encode them somehow. It did not work. That's right, it doesn't work. That's the issue. Do you think it's gonna step up to a new level when the quantum computing becomes available? Or do we need to wait for some kind of AI updates that would be able to think almost like a human? I think AI updates are more important because quantum computing is not really necessary here. And financial markets don't have that much data. I mean, it is a lot, but all the data of all financial markets from the whole world can be fit into one memory card, say about 14 terabytes. We don't have that much data that would require new kind of computing. I think that this non-linear thinking of AIs not always work, not in all realms of human experience. And maybe it's gonna change in upcoming few years. For example, today AI can defeat you in poker. A human, yes. And now we got these poker bots which can defeat anyone playing one-on-one. Well, I think it's because I think in poker you got these combinations, and they are finite. I don't play cards. Well, number of combinations is certainly not infinite, but it's quite big, bigger than in chess. Bigger than in chess? That must be a lot. But in markets we got infinite combinations. For example, even if we know that Bitcoin have to go up, there are dozens or even hundreds of different scenarios by which it could go up. It could grab liquidity, it can enter into trading range and then go up. And it is also susceptible to volatility and also to newsfeed. Maybe Trump says something or Federal Reserve. We cannot predict such things. Okay, so you worked in Citadel, then worked in new fund, created HFT team. What happened next? Yeah, so we were doing it back then. It was around 2008, financial crisis, which was really profitable for HFT strategy. Because when you have so much movement on the markets, in such conditions, many traditional strategies lose. On the other hand, algorithmic strategies perform better. It was a good year back then. And then, what happened is, on the contrary, many other funds started to participate in that. We got more competitors. And then I wanted to do something new. And I was studying in Harvard with the founders of Facebook. And I also knew some other people from startup world. Back then, Google and Facebook were startups. And so I was thinking about moving to Silicon Valley and use my knowledge of, mathematics and computer science to build something. So I left trading and moved to Silicon Valley in 2012. When did you learn about Bitcoin? So about Bitcoin, what's curious? Even though I was working in hedge funds, nobody was even talking about it. But when I moved to Silicon Valley, just 1 month after that, in 2012, someone showed me an article about Bitcoin, and I started digging deeper into it. In terms of mathematics and also cryptography, I have even created a bot together with my friend in 2013 to trade Bitcoin, and it was, in very best case scenario, it could earn $1 grand a month. It was back in 2013. Back then, Bitcoin price was less than $100. And if we kept that bot, maybe improved it somehow, maybe something would work out. But back then we thought, oh, it is such a small market. It is an interesting prospect. But at the moment, the market was so small, it wasn't clear back then. It wasn't clear that you could earn real money by trading. Yeah, as many say, if I have bought Bitcoin in 2010, if you had bought Bitcoin in 2010, you would have lost it within a year. Nobody would hold it till today's prices. Let's talk about Lighter. It is quite hyped up online. CZ quite eagerly promotes Aster exchange. Nobody cared about this Aster. And now CZ takes it and tries to grow it like as if it was a unicorn. CZ looked at it, he's a smart guy. He does not reinvent a wheel, he takes what already showed results and tries to make it better. And Hyperliquid showed results. I think Hyperliquid has a couple of, I wouldn't say drawbacks, but rather inconveniences. And I also would like to talk about James Wynn. He's trader who earned a lot of money and later lost it all. So my first question is, do you think it was a marketing trick by Hyperliquid to attract attention because everyone was writing about him? Or it was a real man who chose Hyperliquid as a trading platform just because he had a lot of resources? Well, me personally, I personally don't know what really happened there. I know the founder of Hyperliquid for a long time. He participated in competitions just like me, also studied in Harvard. You guys all are from the same place. Well, he's a bit younger than me, so we got acquainted a bit later. Not during college years. So I know him for a long time. So I would say that he's that kind of person that, I think that he also was a trader in the past. So I don't think that, in my understanding, that their team is not really into, these kind of marketing tricks. I think mostly what they do is quite organic. So I personally don't know about James Wynn, but for example, let's take Polymarket. There was this French trader who earned 40 million on elections. So I think there are traders like that. So you think that James Wynn, he's just a person, he is just on his own, and he earned. For example, I learned about him. I learned about Hyperliquid. I seen him on channels and on Twitter. I didn't pay much attention to him, but I looked at what he was trading with, and he tried to reach $1 billion. And then I see his wallet is open, his positions, everything is absolutely visible, and I thought he trades so openly, with big volume, why nobody pushes him out, which later has happened. No, I wasn't talking about reputation. Why owners of big capital did not destroy him? I think he was acting too aggressively. So you were talking about liquidation of his positions, right? Yeah, that's right. And eventually they got liquidated. I don't know, was it just a coincidence? Or he just got frustrated and started to open wrong positions, but he lost everything. And then he lost again and again and again, and now nobody looks at him. But because of him, I was writing posts about it, some other guys have written about it, about the fact that James Wynn was trading using hundreds of millions of dollars on the Hyperliquid exchange. Only after that I learned about the exchange, and I started to pay attention to DEX exchanges. And I think they made a great marketing move. There's nothing better than that. And nowadays, in my opinion, do you know this centralized exchange, BingX? Yep. So we do marketing in CIS. And I'm curious about switching to DEX. So I joined the Lighter 3 weeks already. So now is the 3rd week. Yeah, so I enjoy trading. Yeah, and there are some, I wouldn't say drawbacks, more like features I would like to request to make overall process of trading more convenient. For example, display of information. I think we reported that into chat. When position is closed, for some reason it highlights every position separately. Why not unite all of it into one? So you don't have to scroll it all over. Well, I'm sure you eventually gonna fix it all. Right now your platform is basically in beta version. Yeah, that's right. Yeah, we have received this feedback. Yeah. And our team makes updates quite often, so probably it is fixed already. And if not, well, likely next week. Great. And if we go back to the question about these big traders, I think we also need to take into account that the fact that he has big open position on one exchange doesn't mean that, well, maybe he has the opposite position on somewhere else. Or, for example, it may have the opposite position on on some centralized exchange, we wouldn't be able to see it. It is easier to see open positions on DEX, much easier to see which positions every wallet has. Maybe it is hedged somewhere, I don't know. For example, we have some big traders who we can see that they rebalance things from time to time. If Ether goes up, they add more, and if it goes down, they do the opposite. They remove the capital. Likely they also hedge it somewhere else. So, it is really hard to say exactly what strategy they use. Hard to understand everything. We cannot see overall composition of all open positions on all exchanges. Yeah, that's reasonable. At some point I even thought maybe it is hedging made by one of the exchanges. They could hedge their positions on centralized exchange. And then I thought, why would exchange use a nickname James Wynn and then claim to reach the billion? Me personally, I believe that it was a marketing trick. If so, then they did a great job. Whole world learned about them. Nevertheless, right now you hold a second place. I think you are first when it comes to volume of trade. Well, we were first for one day, yes. We pay more attention to the open interest. It is a more stable metric. What is open interest? Well, it's just a sum of, for example, let's say I bought let's say there are only 2 traders on the exchange. And I got long position for 1 Bitcoin, and you got a short position. In that case, open interest would be 2 Bitcoins. And if you multiply it by 110,000, open interest would be 220,000. Basically, it is a summation of all short and all long positions. So what trader can get from it? Why traders should pay attention to it? The bigger open interest is, then what? More liquidity or density? It just means that there are more real positions. For example, if we have low open interest, it would realistically mean that there are a small number of traders. They turn around the volume. Right. It could be organic or some algorithmic systems. They can sort of, they just trade between each other by a certain strategy. And maybe it's happening non-organically. Maybe someone just repeatedly opens and closes positions. Yeah, for example, they may believe that, for example, there's a thing called farming. Yeah, farming. If you have fewer real positions, then, for example, if, you would like to close or open big position and there are no serious players on the other side, then it's not really comfortable for a trader, right? You're gonna try to close it all day. And also, if you have big positions, but you don't have big volume, it is also not good. That's because, let's say we have people who have big positions. They don't want to close them. So nobody closes or opens the positions. Not really good liquidity. So it is good to have both of them. But there must be some kind of balance, right? Yeah, the balance. Yeah, it is. It must be not too... What should be more pronounced? Open interest or trade volume? What do you need to pay attention to? Or say there is a ratio. Well, in terms of ratio, if trading is cheaper and easier, then volume would be higher. And that's good. For example, I was talking about the 90s, and when the trading changed from when you had to walk in exchange building, and now it's digital trading. Of course, volume increased compared to open interest. So there are changes in case of technological innovation. The issue is when this process stops being organic, and this volume is not real. Well, that's not good. And that's why I would say, let's say we've got a volume about 10 times more than open interest. That would mean that there are too many trades that look like algorithmic. Just open and close, open and close. Yeah, so I think there is no some kind of magical numbers that you could say it must be like that. Like the ratio have to be 1.3. I think there is a range. I think when it is between 30% and 300%, it is fine. But when it is too extreme in either direction, then it means that there is something, well, maybe this exchange has very unusual participants. Or something else is happening there. or it has some kind of weird structure. Okay, I came up with this question. Let's say I have opened a position, any position. Would it immediately affect the open interest? Yes, that's right. Okay, so it projects immediately. Then how can you distinguish whether open interest is organic or artificial? If I opened and closed immediately, and it immediately shows, I was just thinking, say I have opened a position and I wait for an hour, and only then it affects the open interest, we can understand that this position is open for at least an hour, and we can observe it, looks like it trades for real. Yet in case if we have many opened and closed, and open interest jumps every time, and how, for me personally, I can understand that it is not just some volume that gets turned around, but real people that just trade and like the exchange. Yes, but open interest is the summation of all positions. So when you close the position, it also goes down. So if you open and immediately close, it does not accumulate. Right, it's dynamic. Now I see. And that's why, and let's say, for example, someone opened big position, but only for a few seconds, and then immediately closed it. Then it wouldn't, as if it didn't happen. Yeah, as if it didn't happen. And that's why this open interest metric is, all these metrics, there's no ideal one. Let's say, for example, if we take volume, we can imagine a situation where volume looks really good, but in reality it's not that good. Same thing could be with interest. Let's say, here's the question, when do you measure it? When do you compute open interest? Say in traditional finance, open interest is measured when we have, American exchange gets closed at 4 p.m. And at 4 p.m. we compute open interest. Yes, but on crypto markets, we don't stop trade at 4 p.m. Yes, 24/7. So when do we measure it? At certain time, or averaged throughout the day, or do we take maximal value? If we do take maximal, let's say someone opened a big position for a couple of seconds. Yeah, that's right, it's not... There is no perfect metric, but all these metrics, they indicate something, certain kind of statistics that they inform us about different types of traders on the exchange and how well balanced they are. They tell us about overall structure. Is it good? I think there's no such thing as this metric supposed to be this, it must have this value. You look at the whole composition. So Lighter is a DEX exchange. Yes. Let me explain in a couple of words how centralized exchanges like Binance, Bybit, BitGet, BingX, and all others, how they are different from decentralized ones. On centralized exchanges, you have to pass KYC, you don't have direct access to your own assets, which is most important. You open the wallet, see the assets, but that's only a display. In fact, your assets are processed somewhere, used in farming or mining, very likely, and you would never know about it. And there are different situations. I'm not saying that DEX is better than CEX. You trade where you like it. But sometimes exchanges block your assets. It happens quite often on MEXC. I attack MEXC because I get a chat with 45,000 people. And quite often people write, MEXC has frozen my money for some kind of abnormal activity. Even though they were just trading. They are not professionals. Try to open something and then close. They trade on MEXC. And it takes up to 2 months to unfreeze the assets. I don't know why they do this. Before it worked just fine. Just wanted to share this observation. So decentralized exchange is different. In order to trade on decentralized exchange, you need to set up a MetaMask wallet or Trust wallet where you are given 24 words which serve as an access key to your wallet. If you lose them, you lose the assets. And then you go to the website, connect your wallet, and start trading. You get pretty much same UI as for centralized exchanges. Everything exactly the same, though you get more on-chain metrics. You can even see the funding rate where it's smaller or bigger, so you could short your positions to arbitrage the funding rate. I haven't fully figured out how it is in Lighter. Just recently have created a pool, and I'm already down by 80,000 bucks. Just got squeezed a bit. So now I'm watching. By the way, as far as I understand, right now you can farm some points. So I have opened a pool, so I trade on the pool. I also trade on second account. I got a sub account. And the fact that I hold my positions for a long time, is it good or bad? I have opened my positions and I wait. Right now they are negative. Or it would be better to open and close. For me personally, it is convenient to just wait until they become positive. I have set up take profit orders and I just wait. So which way is better? Because this way we earn points. Everybody looks for ways to earn. By the way, guys, there's zero commission. That was my next question. You know, the whole this idea about earning points, you don't have it on centralized exchanges. No? You know, there is this idea that when you participate in some kind of new blockchain as a user, and later you receive a token from it, also take into account that your assets cannot be frozen, you won't have such problems, and also take into account that you have more control over where your assets go. Full control, right. And beside that, you also can earn some points, and later there would be tokens. Although we do not disclose how exactly we count the points, the idea that you should trade as if how you like it. Yeah, the way you would have traded. Because otherwise, I was not asking to understand how to earn more points. Rather, it was about, is it alright that I have opened positions and I just hold them? Because that's how I like it. Is there anything not right about it? The opposite. I think it's more like, you know, organic trading, it's more like it is precisely what we reward by points. And any abnormal activity, we reward less. You know, on centralized exchanges, I prefer to base my trading on levels, trade breakouts and compression. And you know, I wouldn't call my strategy, it's not really scalping, you know, but something around it. I also make positional deals, and I have decided that on Lighter, I'm gonna trade positionally. Just open my positions and just wait, you know, for market growth. You have mentioned points. So basically people who trade on Lighter, and these people can earn points, and later they will be transformed to just how it happened with Hyperliquid, the hype coin. Yes, so you're gonna have your own coin, Litecoin or something. And guys, you know, right now we are here on Korean Blockchain Week, visiting side events, talking with everyone. And you know, many bet on this narrative of bull market, bet on assets growth due to decentralized exchanges. Because right now DEX exchanges started to show results. They showed up and told, guys, we are here, let's trade and develop together. And I think more and more people are gonna not necessarily leaving the centralized exchanges, but probably use decentralized exchange as a second one. And it attracts more players. You got zero commission. How do you earn if you got zero commission? That's actually a very interesting question. Yes, indeed, we have zero commission for traders that trade manually. And before we talked about these algorithmic traders, they do get charged with commission. How much they pay? For example, in Citadel, if, for example, some kind of professional company, if professional market maker or hedge fund comes to us, they wouldn't have zero commission. And they want to participate in the market. Have you heard about Robinhood? Yep. I was the first advisor of the Robinhood company. It was 13 years ago, and I saw how this business model was built. Back then, nobody believed in this business model, that you can keep it free for regular traders and make it at the expense of hedge funds and market makers. Nowadays, quite contrary, not only Robinhood, but other exchanges started to do it. Because it's a working model. Yes, exactly, this model works. However, on crypto markets, it's still not that common. Though realistically, you can earn on it even more, because you're gonna have bigger volume. It would be so because it opens up the opportunities for strategies that would otherwise... Because you always could... Well, in worst case, for example, the goal is exchange would like to earn as much as possible, which not always means that the goal is to create a market. For example, growth of the Amazon as a company, they didn't earn anything first 15 years, and later they became second biggest company. I am not saying that we're gonna wait 15 years. I am saying that sometimes you need to give your users more opportunities to earn, because it is better for overall growth. But let's say exchange would like to earn as much as possible. We always would be able to say, okay, let's make market maker to make 2 basis points, instead of trader paying them. And what's gonna happen next? Market maker will increase his spread by 2 basis points as well. Any representatives of exchanges, there are guys from business development that watch us, and I know guys that own exchanges. Sorry for interrupting, but I really want to say it. You know, I didn't really thought about it. Many exchanges block HFT traders. That happens because, I don't know why, but guys from crypto exchanges believe that high frequency trading is some kind of fraud. As if it is some kind of cheating. But if we really think about it, it's on the contrary. If user gonna have zero commission, yet companies that use algorithmic HFT trading gonna pay the commission, so this would enable HFT trading and also increase liquidity, and as a result, they're gonna attract more new users due to zero commission. It is an open model. You know, every trader poses himself a question. How exchange does earn money? Exchanges earn from position liquidations and from commissions. And if there is a big player with big money, and if he gonna pay for the expenses, and me, regular trader, don't have to pay, I would like that a lot. Because big player has big money, it's all fair. And you know, I didn't even thought about it. Yeah, right, and you know, I often give this analogy. Let's say that there is some kind of professional company that, and let's say they trade billion-dollar assets, and let's say on Lighter exchange, they earn 100,000 a day. And let's say we started to charge them, and now they earn 80 hundreds of thousands a day. That wouldn't make them leave. They still earn. It's not like, even if they leave, someone else gonna come and compete with them. But if we take a regular trader, if we start to charge him, he actually can leave. Because he can lose it all. I deposited $100,000 on Lighter. Now only 20,000 left. I've lost it. I am trader, but I'm not leaving. I like it. Yeah, but I'm saying if we had, for example, commissions, then probably you would have even less. For example, we have traders that there's one trader that have published how he have earned 2.6 million. He earned it by trading, and he said that if we had commissions, then he would have to pay for it more than $1 million just for commission, for transactions. So he earned 2.6 million, but with commissions he probably would have earned closer to 1 million. Right, so I trade on BingX exchange. I've got 5-level VIP there. Due to trade volume and my deposit, recently I had Supreme status. I traded a lot. I made 1 billion trade volume for the last months just by myself. And I had a Supreme level there. So making limit orders is free, and market orders have cheap commission. And of course not everybody has a VIP level, and I still managed to save 270,000 bucks just on commission. So system counts how much commission I would have paid if I was just a new user and traded with such volumes. About 250 to 270,000. That's quite visible money. Okay, so after you're gonna finish. So right now you are in closed beta. And you know, I haven't even published anything yet in my Telegram channel. You know why? Hunt gives me 30 invites, and I share them in my closed community, 300 people. And they are taken in seconds. And if I publish it in my Telegram channel, which has 1.3 million subscribers, all would be taken in half a second. And it's not really convenient for me to always request more, so I just prefer to wait, prepare some materials, until it becomes open for everyone, so I don't have to, you know. By the way, haven't you thought about this, this marketing approach? This multi-level partner program? Because, affiliate system, it is a powerful drive for product marketing. And due to the fact that we do marketing for BingX exchange, we do it for a long time and have clear structure, how to market exchanges, how to promote them. Haven't you thought about making 2-3 level partnership program? Actually, we already have something similar. Because right now, when you invite someone, you do receive a share. So when they receive points, you also receive a share of those points. That is the first level. And we also have this thing that You also get a share from a share if they invited someone as well. Oh, so you have this mechanic already? Yes, we do have it, but it's not yet not open for everyone. Well, yeah, it's not open, but we have similar structures already in place. And so when the time comes and when we're gonna open for a public access, then we also will make this mechanic available to everyone. So when the beta testing will be over, will you keep the ability to earn points? Or what? Well, we're gonna have second season. Ah, so you're gonna split it in seasons. And how many seasons you're gonna have? How long they're gonna last? We're gonna have 2 till the end of the year. After that, we expect to issue the token. And maybe after that, we're gonna have additional seasons. When do you plan to have TGE? Closer to end of the year. It means that you expect that market is gonna behave well till the end of the year? That everything gonna grow? Well, yeah, we believe that everything gonna be well, especially related to DeFi. That would include DEX exchanges and also like stable coins, also lending. First, there are many interesting products. We also know that in the United States there would be many new positive changes when it comes to regulation. So on this market, and many got involved with DeFi. Even Stripe company got involved with DeFi. Also Robinhood and other exchanges. So it's clear that DeFi gonna grow. And we also are expecting good news in upcoming few months. It is hard to predict deeper into the future, but by the way, I also would like to say that on DEX exchanges, you can use wallets like MetaMask, for example, but also on our Lighter exchange and on a few others, you can also operate using email. That feature works as well. Using email, so you can log in using Google account, for example. Well, not necessarily Google, but you can use email to log in, yes. For users that just came from Binance, for example, or from somewhere else. For the ones that haven't figured out yet how exactly MetaMask works, for example, they can use just plain email. Which approach is more secure? Well, these are different kinds of security. If user knows exactly what he is doing, MetaMask is more secure. MetaMask. Right, MetaMask. But if user does not understand how exactly MetaMask works, I mean, in theory, it is more secure. But if you don't know how it works, then the opposite. You can actually, lose your key. That's right. Then it's better to use email. In any case, it is more secure than using centralized exchange. That is because, there's always a risk of losing your password. It is there in any case. But on centralized exchanges, you also have other type of risk that exchanges themselves can steal from you or get hacked. Is it possible to hack you? Well, there are different kinds of attacks. But scenario when someone gets in and takes all the money, that's not possible. For that to happen, you need to break whole Ethereum blockchain. Recently, Bybit has lost $1.6 billion. It is the biggest loss among all centralized exchanges through the hacker attack. That kind of attacks, can they happen to you? No. So hackers have to break Ethereum blockchain in order to steal money. So it's basically impossible. Right. And Vitalik Buterin works a lot on scalability and security. Guys, we are protected by Vitalik Buterin. Do you know him? I don't know him personally. Just recently I was writing about it. Right now we are one of the biggest projects that use Ethereum. And I was saying that the very fact that we were able to build this thing without direct interaction with Ethereum team, I think it demonstrates the power of decentralization. For example, well, I don't want to say anything bad about Solana. They have many good projects there, But their team works really closely with many projects. They support them. But let's take Bitcoin for example. Nobody that develops software for Bitcoin knows Satoshi Nakamoto. And still, Bitcoin thrives. So the very fact that we can build a system using Ethereum without getting any help from the founders of this network demonstrates how decentralized it is. Yeah, that's cool. Okay, so after... By the way, I should say that Buterin also participated in competitive programming. You competed together? No, not during the same years. Different periods. And he also earned awards? I think he got bronze medal, and I got silver one. Awesome. What did you guys do there? You know, I'm really just curious. You mean competitive programming? Yeah. Well, you get 5 hours. And you get 6 tasks. And you need to write a program to solve every task, and later it gets tested on different test cases. For example, it gets 20 different test inputs, and this program must pass them all. So it's actual coding. Yeah, that's right. And your program, it has to work. It later gets run and tested. It's not like you just explain the theory and that's it. About how it could run. You actually need to write it, and later it gets tested. It should pass different test cases. What language do you use? You know, I'm really not an expert, but I know that there are languages like Java. So what language do you use? You write code using what? Or how it is formulated? Right, but do you mean code in Lighter or in general? Yeah, I mean in general. Well, I started programming from C++. I have heard about it. But I started the code when I was 8. You know, back in the 90s. So I think back then Java didn't exist yet, or it was really early. There was no Python back then. C++ was the main choice back then. But nowadays, I use popular languages like Java or Python, quite popular in blockchain world. Also Solidity and Go programming language. What you can say about Ton ecosystem? Why do you think it does not develop? Why nobody can create there anything but mini app? Do you have an opinion about it? Or rather, why did you choose Ethereum blockchain? Why not Solana? Why not SUI? Why not Starknet or other platforms? Well, that is because, as we already discussed, it is the most secure platform. It is the most decentralized one, except for Bitcoin, of course. Well, I would argue about the decentralization of Ethereum though, because after they switched to proof of stake, well, there's almost nothing left of this decentralization. That's what I think. Proof of work, that's the real decentralization. Yeah, you can say that, but there are also many different kinds of validators. Say the number of... Well, if we look at the actual... I mean, I never heard about any actual cases of corruption inside this network. Ethereum got forked. But that was 10 years ago. No, when Joe McAfee hanged himself. Because he has stored... Haven't you heard about this story? So he stored sensitive information about all world leaders into an Ethereum block. And the blockchain got forked to conceal this information. Well, I don't know, but you know, John McAfee, I think this is something out of the realm of conspiracy theories. I don't know about this. Well, yeah, this is a conspiracy theory. 10 years ago, Ethereum had this problem. When, you know, they needed to make a fork. You know, this story with DAO organization. But you know, this was long time ago. And since then, everything was stable. And we are really happy with Ethereum. And also, not just us. We were talking about DeFi, $150 billion of capital, which is much more than in any other kinds of networks altogether. So probably we are not the only ones who believes that this is the most stable and secure platform. And our innovation was that we have built L2 layer The idea is that the base level doesn't have to be fastest or cheapest, but it has to be very stable and very secure. And we have built a second layer on top, which is on contrary quite fast and also cheap. And proofs of all activities are stored in Ethereum blockchain. And let's imagine that some hacker tries to do something, tries to mess with our exchange. He wouldn't be able to produce a proof for his changes, and Ethereum would reject his message, and user would be able to get his assets back through Ethereum. Directly through smart contract. Yes. What is your TVL currently? And how do you measure it? What do I have to do to affect the TVL? You need to transfer capital to the exchange. Okay, transfer the capital. Do I have to deposit it on my personal account? Or do I have to put it in a pool? Well, you don't have to put it in a pool. Either for trading or in pool, we count both. And what is TVL now? Is it more than $500 million? Yeah, it increased greatly for the last week. So right now, what is the date today? 23rd, 24th. On 21st, it exceeded $500 million. Now it's about 560 million. 60 million in 4 days. Good numbers. I remember that you had this metric, that you grew faster than Hyperliquid on the same fixed period. Which metric it was? Yeah, right. Hyperliquid. You know, initially they required... I don't remember exactly when did we measure it, but for them it took 16 months to reach... I think it was 400 million TVL or something, and for us it took only 7 months. Or something like that. Almost 3 times less. But you know, I should say that for us, this statistics, I mean for our users, I mean our team, we focus only on our product. And it just grows organically. Yeah, it just grows by itself. Yeah, so comparing us with other exchanges, our team don't really aim for that. It is our users who compare. They use different exchanges and compare them. And we like it, of course. You're not focusing on that. Right, we're just improving our product. And we got so many things that we need to build. And to improve our product, we're focused on that. And that is what users see. Right. That is what people notice. I point out that to people, because I cannot see what's going on inside. I don't know about your plans, but I see these metrics. So for others it took 18 months, and you did it 3 times faster. This would be significant for me. And I also sort of understand why it happened that way. I think that's because Hyperliquid grown significantly, and many people earned there a lot of money, and I personally know a guy who earned there more than $2 million, and he didn't even know that he could earn that much. He was trading just for fun, and he invited me to trade as well, and for some reason I passed it. And now people see how much you can earn on Hyperliquid, and they see that Lighter comes second after Hyperliquid. Well, second for now. Do you plan to come first? Well, right, you said that you don't really focus on that, right? And I hope you eventually gonna be first, and that people gonna come to you, and many people, you know, they want money. They're gonna come and they're gonna farm points. And you will become top 1. What is your daily trade volume? Isn't it $10 billion? I think I saw this information. Am I mistaken? You mean volume? Or do I mistake it with Axter Exchange? Yeah, daily trade volume. Well, I think it's about 6 or 7 billions. Yeah, that is not far from Aster. Why do you think people vote for Aster so much? Well, you know, I would say that we need to look at average stats. You know, just picking one day, better to take monthly values. Right. If you got new exchange and everybody talks about it, and on a single day they got some big volume, doesn't show anything. Yes. You know, there was this exchange called Evo. Aeva in Russian. Yeah, that's right. And when they had TGE, for several days they had their trade volume for almost like... Yeah, and I think it was almost like about 2 years ago, when the volume was smaller in general, their volume was about 100 million daily, which was not small back then, while on the YDX exchange, it was billion a day. And then suddenly after TEG, it became 3 billions a day. For a couple of days, everybody thought, wow, 3 billion, and later it came back to normal. So we will see how it's gonna play out. So I wouldn't focus on like 1 or 2 days, and right now, for several months already, we reliably get trade volume from 3 to 6 or 7 billions. And open interest has grown from 300 million up to 1.2 billion for the last several months. So it's 4-time growth. Good numbers. This AIVA exchange, you mean the one that is owned by Sasha, the Korean guy? We have participated in private round there in 2021. Well, I don't know who's the founder. He's from Novosibirsk. AEVO, yes. Well, honestly, I don't know the team, but I just remember that when they had TGE, their volume has skyrocketed and then fell back down. Let me ask a very simple question, and I'm not looking for a direct answer, just would like to hear an opinion. And this is not a financial advice. After you will airdrop your tokens, in your opinion, is it better to sell it or better to keep it? Will these tokens be utilized in any way? Yeah, right. You know, I would recommend to keep them. There are many things that we plan to do afterwards. Things that we're gonna add. We're gonna add spot trading, and later we're gonna have universal cross margin. Say you hold Bitcoin or Ethereum assets and you can use them as a collateral. Yeah, that's right. And later we're gonna add additional markets, for example, like real world assets where they have real stocks. And if you're gonna hold tokens, then you will be able to use these new products, join new pools, and for those who trade algorithmically, your commission is gonna be smaller. There's gonna be some kind of buyback formula. We've got great deal of plans. Let's discuss just markets in general. About Bitcoin, about Ethereum. Right now it seems to be clear that assets of decentralized exchanges are going to grow. So it's better to buy and hold on to them. And when farmers bring down the price on TGE, it is better to buy it all out and hold on to it for several months in order to get good profit. Is there any other aspects that we should pay attention to? Maybe some other sectors or some singular gems that you could share with us? Some things that you pay attention to? Who knows? Maybe you have heard something from a neighbor. Maybe you have that kind of insights that you can share with us. I would prefer to look at, as I said before, I would pay attention to DeFi. I believe it's going to grow. There are many interesting products, upcoming new regulations. Would you recommend any protocols to our users? Because not all of them are traders. Some of them just have money. So where do you think they could put them in? Where to they could transfer it or deposit it somewhere? Just put it somewhere and farm points? Maybe some kind of pools? I know you have pool. Lighter pool, or how do you call it? Yes, LLB. So this main pool, I think it has $1 billion TVL. Oh wait, a million. Wait, I think I'm mistaken. $150 million TVL. That is the pool that is managed by Lighter itself. Yes, that's right. Basically, it is managed by the protocol itself. By itself. So it is secure. Right. It is secure in the sense that protocol governs what to buy and what to sell, but protocol cannot do anything with these assets. It cannot do anything with these assets. It's not like we just say, oh, we're transferring it to other exchange. Yeah, that's right. You don't have access to it. Yes, we don't have access. We can only access decision making about buying and selling. As far as I understand, you hedge your positions that traders open through this pool. I wouldn't say that we hedge them. It's like many of them, I would say, for many positions, When somebody buys or sells, we're just standing on the other side. But right now, other market makers also participate in that. But initially, it was the only market maker. And that allows us to have liquidity from the very beginning. So it is your market maker that manages this pool? Yes, that's right. And what is current APR there? I think about 60%. Well, that's pretty good. And which period it is? So you get 60% annually from the amount, but APR is moving, right? That's right, and it is calculated as... So we compute average among... out of... So we compute weighted sum, and the last days are more significant. So we compute average with weights, and we compute it as, you know, in order to predict. I mean, we cannot know how profitable it's gonna be in the future, but the best estimation is 60%. So beside that, people earn 60% in USDT, and they also farm tokens for participation. Do they earn points from it? For pool maintenance, no, they do not. Only for active trading. But let's say I brought money to someone else's pool. Not the official one, but created by someone else, by some community. In that case, yes. But it's far riskier, right? Well, there is a risk indeed. I mean, if some trader creates a pool, you can look up information about this trader, what results he had in the past, his history. Yeah, so you should watch out for it. Take a look at it. And you should base your decision on your own judgment. But yeah, you can earn points this way. But in LLP pool there is no points. Demand is too high. It is actually the opposite. You need to have points to get access to it. Yeah, that's right. I think to guarantee your participation in pool, you need to trade for a certain number of days or make certain trade volume. Yes, you need to have certain amount of points. Otherwise, we would have a situation when there would be too much capital. And it is actually a problem because yield would be smaller. Because pool would earn the same. For example, if it had 10 times more capital, it would not generate new forms of earning. Profit would be the same, capital would be bigger. As a result, yield would be smaller. That's right. I think I don't have any more questions. All links are in the description. Vladimir, thank you for coming. Thank you. Okay guys, now I'm gonna show you step-by-step guide what to do to earn points that later could be exchanged on 1-for-1 basis for the Lighter coin, which later can be sold on airdrop, which gonna happen in December. So right now there is ongoing closed beta testing of this decentralized exchange platform, which you can join through special link in the description. Okay, so we open the exchange using link in the description. You will see something like this. After that, it should look like this. Then double click, and then you copy the last part. Starts with DPT and ends with X7V4. Then we open MetaMask wallet. If you don't have one, then please search download MetaMask extension for browser, install it, put it here, remember the seed phrase. After that, select Ethereum mainnet, copy the wallet address, transfer to it USDC. Notice USDC, not USDT. Transfer it from a wallet or from exchange. Then click connect to user referral link. Click MetaMask. Click connect. Okay, so now you have connected your wallet that you have USDC on to the Lighter decentralized exchange. Okay, now we click on link that says here, and we enter the code that we previously have copied from the address bar. Entering Telegram username. Also Discord and Twitter accounts, if you have any. And then click submit. Okay, so now you have connected to the decentralized exchange. You click create account. Okay, so you need to transfer USDC that are right now on your MetaMask wallet So you transfer it to the Lighter decentralized exchange. Since we use Ethereum network, select Ethereum here, then we select the amount for transfer, 5 for 10,000 bucks or $1 million, then click deposit. Then wait for a minute or so, and now you are good to go. Now you can trade, limit orders, market orders, zero commission, select the volume, leverage factor. You can trade anything, pick any cryptocurrency, just like it is on any exchange. And you pay zero taker or maker fees. It's all yours. You see I have open position for NEAR with 7x leverage for $3,700 and also POL with 3x leverage for $5,600. Some of you may think that, wow, zero commissions. I can put there $1,000 and then just constantly open and close positions. According to information that we have from founders, you wouldn't get much from it. So it's better to open the position, hold it for a day, and then close it. Or close it as soon as you get profit. It wouldn't be considered as just points farming. But the best way would be just opening a position, no need to set leverage too high. And then just open and close and play with all kinds of assets. There is plenty of different assets. Exchange gets updates every day. And really, you don't need to know anything else. You can tune up thing or two in settings. Everything is in English, everything clear. And if you do not understand English, you can use browser extensions to translate it. So we are waiting till December, pushing volume, earning points. You can look them up on the leaderboard tab. Here you're gonna see your points, your rank, number of users that you have referred, and how many points you have earned from them. According to up-to-date information, 1 point is equivalent to $60, because there are already requests in Discord for purchasing these points. Mostly purchases, 1 point $60. Also, you can make it look like this, show it others, tell everyone, save it and later send it to our chat. Link to this exchange is in the description. Referral code is in the description. If it doesn't work, contact our support account. Just specify that you need code for Lighter and we will give you the code. Because these codes are limited and they can quickly run out. So don't hesitate to write. Please like and subscribe. Bye bye.